What's going on, everybody? Hi, this is the introduction to crypto class. All right, and for this class is for those who are new to crypto, who don't have any crypto, don't understand crypto, want to know more about crypto, want to gain an understanding of what crypto is and what blockchain is, and this is the initial course that you would take. Um, Introductory into what blockchain is and crypto technology. All right, and this is CryptoCrane here, and we'll go ahead and get started. All right, before we start, go ahead and plug in the YouTube channels. All right, and the Twitter page where you can follow the Crypto Hangout on Twitter. A lot of news and a lot of info is put out on Twitter, and you can come across a lot of the new coins before they drop and hottest trends, and NFTs, etc. off Twitter. Okay, so we'll get started. All right, so in this class right here, you'll learn what is blockchain. All right, what is a wallet, how to move coins to a wallet, researching good coins to invest in, what is mining, and what is a stable coin, a trader versus investor, and what the terms bullish and bearish. You hear these terms a lot in the crypto market or just in the investing um, world in general. All right, so these are the things that you will learn here in this video, and so we'll go ahead and get started. All right, so first and foremost, what is a blockchain? You hear blockchain talked about all the time on the news, and on Facebook, and etc. So, what is actual the blockchain? So, the blockchain, by definition, is a digital ledger in which transactions made in Bitcoin or another cryptocurrency are recorded chronologically and publicly. We can actually have a look at the blockchain and see evidence of what's going on. As an example, so banks record ledgers or record every transaction that, or they're supposed to record every transaction that they partake in, whether it's be receiving or dishing out. And so that is what the blockchain is recording those ledgers digitally and without human intervention. So that's what that is on smart contracts. All right. So smart contract is code, a contract built out of a code that executes the code and terms and conditions of the contract digitally. All right. So that's what a smart contract is. All right. So let's see here. All right. So blockchain is the technology that enables the existence of cryptocurrency. All right, amongst other things. All right. So the cryptocurrency is a medium of exchange, just like the U.S. dollar, but it's digital and uses encryption techniques to control the creation of monetary units and to verify the transaction of funds. All right. So it's just that's where you get cryptocurrency because it's digital money, digital currency. All right. So next up, what is a wallet? So of course, you have to have a place to store this digital asset, and this is where the wallets come into play. Okay, this is you have your wallets, and you access you when you first download your wallet or whatnot to store your assets and your digital assets in, you get what's called private keys. Okay, now these private keys are what's keeping your crypto safe and accessible. So you do not want to lose these private keys, or you do not want to give these private keys out no matter what. Nobody should ever ask you for your private keys, not customer service, not anybody. Nobody should ask you for your private keys. That is something that is between you and the creator. Okay. And if once you give up your private keys, then your crypto can be stolen at any time. Whoever has the private keys has access to your crypto wallets and thus has access to your funds. Okay. So you do not want to do that. All right. And private keys usually go from 12 to 14 randomly chosen words in random order. And you have to repeat those in those random in that order that they give them to you, um, in the correct order, and therefore you can access your funds. All right. So now, crypto wallets also allow you to send and receive and spend your cryptocurrency, such as Ethereum, Bitcoin, or USDC, which is a stable coin, which we'll get into later on. Okay, so uh, the wallet store your crypto assets. You can send crypto assets from your wallet, and you can receive crypto assets to your wallet. Some crypto wallets allow you to convert asset in between assets, such as Exodus, which meaning that you can have Bitcoin or Ethereum and convert inside your wallet to another coins called, say, Solana or XRP or BNB, which is Binance Coin. Okay. Now, you have two different types of wallets. You have a centralized wallet and you have a decentralized wallet. Okay. Centralized wallets normally come with like centralized exchanges and centralized coins more. So like Coinbase, Crypto.com, etc. Those more so are like centralized wallets. Then you have decentralized wallets such as MetaMask and Trust Wallet. Okay, and to give you an example of what MetaMask is, I will show you what MetaMask is. It's just a browser extension. Okay, you just click on the extension right here, your MetaMask extension, and once it will pop up. Let's see here. Mine doesn't want to pop up. Okay, there it goes. See, and it pops up, and it's an extension. You log in, and it has your assets and your currency, etc. All right. The other one is called Trust Wallet. All right, and that one is downloadable to your phone, Android or iOS, Android or iOS, and that is decentralized. There's no customer service or anything. So if you make any mistakes sending to that wallet, you cannot get your crypto back. That is why it's imperative when you're sending and receiving crypto that you always look at the last four and the first four of that address and verify before you send it, because once you send it, you can't get it back. Okay, so that is something important that you must take hold of and must undertake. All right. And another rule of thumb is that something that I do, I write down all my private keys in a notebook, and then I write them down into other notebooks just in case I lose one notebook. I still have two others, or just in case if something happens to me, my loved ones and ones that are dedicated in my will have access to those funds. All right, because if you do not have that, then it is lost forever. All right, so keep that in mind as well. All right, and let's see here. So we'll see what's next. All right, so how do you research good coins to buy? Right. So one, you look at their white paper. Two, you look at their tokenomics. Three, you look at the developers. Four, you look at the partnerships. Five, you look at the market cap. Six, you look at the circulating supply. Seven, you look at the utility case. Eight, projects on the ecosystem. Nine, a social media presence such as a Telegram, Medium, or Twitter. Now they must have those three: Telegram, Medium, and Twitter. Okay, or chances are it could be a scam coin, and chances are it could be a rug pull. So make sure that it has those three: social media presence, and make sure that they're active on those presence. And what I mean by Medium is this is an example of Medium. Okay, this is VChain's Medium. All right. As you can see, VChain's Foundation, they're very active on the medium. They're putting all the information out to the people that hold their coins, and you can see exactly what's going on with their project, right? So you see right here, proven case of safety blockchain onboards fresh meat dog food brand. So yeah, as VChain is a supply chain crypto, and it's signed on with a lot of food companies, and it's also energy friendly. Yes, a green. Doesn't have that big of a carbon footprint like those say about Bitcoin. So as you can see right here, it's mentioning right here. So this is VChain, and this is the site is Medium. As you can see, VChain Foundation Medium. All right, different coins will also have different have pages as well. Okay, so you can create an account, you can follow them, etc. This is Medium, right? Now, white paper, tokenomics, develop partnership, market cap, circulating supply, and use case. How do you find those things? Okay, you start off by going to two places. Okay, one of two places. You can go to CoinGecko.com or you can go to CoinMarketCap.com. Okay, and as you can see, all the coins, prices, etc. are right here on CoinMarketCap, and on CoinGecko, it's the same thing as you can see. Now, when you're searching for a coin, okay, you researching a coin, and you want to make sure that you're going to the correct website, and just make sure it's not a scam site or anything. You come here to Coin Gecko, okay, and you click on a coin. Let's click on. Okay, we can go to VChain since we already looked at it. Click on VChain on the coin, right? As you can see on CoinGecko, you have all the information. It has the website, the Explorer, okay. And when it says the Explorer, this is how you see your transactions. See all the transactions that are being on this right here? Recent transactions 10 seconds ago. Okay, as you can see, all the transaction. That's where you see your transactions at. Now you can put your transaction ID. Say I bought some. Let's say for instance I bought some VChain, and I'm trying to track it to see how long. You know what I'm saying? See what stage it's in to be in before it gets to my wallet. I can put my transaction ID right here, hit search, and find it, and it can tell me what stage it is and what block that it's in. Okay. As you can see, another block right here has got in it, got added on here, and this block has um, looks like three transactions. So it looks like it has three transactions in it. So this one has four, and one, and etc. So as you can see, that's you can come here and you can go to their GitHub from here. You can see the smart track platform, all right, and you can go to their website and see the wallets or the wallets that you can get them in that you can hold VChain in. You can go to their website here, and as you can see, this is a website. You can check it out now and see what they're about. Right now, I mentioned partnerships. You can also find who they're partners with here on the same site, and then you go to the news. Let's go back. Let's see. Let's see what they have their partners on the front on here. As you can see, the developers and committee, advisory boards. Let's see if they have the partners. It has right here the wallets that you can hold it in. VChain Thor wallet. The third party wallets you can hold it in. Atomic wallet, Exodus, Trust wallet, etc. And the other thing that was mentioned is the white paper, and this is where you find the tokenomics and utility case. Okay, so let's look at tokenomics. Let's go to the white paper. White paper is on every website of the coin. Okay, that's where you can find their white paper at. So this is their white paper, right? And you see here on the left hand side, it says VChain White Paper 2.0. It shows their vision, their governance, their economic model, right? Which is their tokenomics, how their governing structure works, and their use cases right here. As you know, a new. So this is you can see how there is going to be mass adopted, and the use case, the reason why it was going to be mass adopted, etc. Their ecosystem and prevalence for food and beverage, how they're going to solve the logistics problem. So these are the utility cases for VChain. And that's how you find the utility cases. Now, how do you find the market cap and circulating supply? Oh, and that's also how you find the projects on the ecosystem as well. But how? I'm gonna show you another way here in a minute. But how do you find the circulating supply and market cap? You go back to CoinGecko or the coin market cap, and you see right here, market cap, right there, circulating supply, total supply, right there. That's where you find that at. Okay. Now, VChain doesn't have many projects on the ecosystem, so we'll look at something that does. We'll go to AVAX, or actually, we'll go to XRP. They don't want to show the projects. Okay, we'll go to Solana then. So you can look at the projects that are on the ecosystem, but same place, right? You go right here, and you see it says Solana ecosystem right down here. You click on that, and it show you all the projects that are on the Solana ecosystem. All these projects, and you click on them, and you see what they are. Doing the same thing. Look at the market cap, etc. Total supply, max supply, coin. Total supply. The smaller the market cap, the bigger the chance that it has to do those big 1,000x's, etc. You go to the website and you check it out, and that is what you do. See what this coin is. And it's an open source, decentralized open source cloud storage network, web services. So this would be a good coin to invest in. It's $2.38. So that is how you find and research, uh, fulfill all of these on this list. And you can also find their Telegram. See Telegram right here, their Discord right here, their Twitter right here, and a lot of them. Sometimes they have their network, their Medium right here. Okay, so you can find all that information on CoinGecko and CoinMarketCap. Right. So now that I've shown you that information, now let's go into pretty much what this is. White paper. It's created by the founders and developers of a crypto to help sell the crypto. But instead of pushing the emotional buttons, they provide facts, diagrams, statistics, and quotes. White papers are written by technically focused individuals for technically interested buyers. Okay. So that's what the white paper is. And I showed you the white paper where you've seen the tokenomics and where you've seen the utility cases. And so the tokenomics is the study of how cryptos work within the broader ecosystem. This includes such things like token distribution as well as how they can be used to incentivize positive behavior in the network. So, when I showed you guys the market capitalization, I'm pretty sure a lot of you were wondering what does that mean. So we're going to dive into that. Market capitalization is the indicator that creates and keeps track of the market value of a cryptocurrency. Market cap is used as an indicator of the dominance and the popularity of the cryptocurrency. Okay, so as the cryptocurrency, like for Shiba Inu, for instance, as the cryptocurrency grow in popularity, more people started to buy it. Thus, for it, the market cap started to grow. Okay, that's how that works. Circulating supply. All right, this is the best approximation of the number of coins that are circulating in the market and the general public's hands. Max supply is the best approximation of the maximum amount of coins that will ever exist in the lifetime of the cryptocurrency. Utility use case. A utility token is defined as the following: a digital token of cryptocurrency that is issued in order to fund development of the cryptocurrency and that can later be used to purchase a good or service offered by the issuer of the cryptocurrency. All right, so that is the utility. Okay, all right, so you know, some cryptos are used as payment tokens. Some are used as governance for the actual blockchain, and then some are used for, uh, you know, just for trading, pretty much purposes. Okay, so I know you guys have heard the term altcoin. So an altcoin is an alternate cryptocurrency other than Bitcoin. So anything other than Bitcoin is an altcoin, all right? So and it's starting to get to where anything other than Bitcoin and Ethereum is considered an altcoin, all right? A bunch of altcoins, those with strong utility and use cases, which will dominate the markets. So that's what you see. You hear about altcoin season. This is kind of what we're in right now, in the month of November, which is altcoin season. And you see a lot of the small caps, small market cap coins have been running up, um, and making fortunes for people who invested in those projects early. All right. So where can you get crypto at? So there are a lot of places that you can get crypto, but depending on your region and jurisdiction, you may be limited to what you can do. Okay. So you can get Coinbase in the U.S., Crypto.com in the U.S., Uphold in the U.S., and on Cash App you can buy Bitcoin and Bitcoin only. Okay, not Bitcoin Cash, but just Bitcoin. So these are the places where you can get it in the U.S. There are a couple of other places you can get it, like KuCoin, but you can't do KYC, which is called Know Your Customer, meaning you upload your ID, etc. But those exchanges will allow you to trade up to 1 Bitcoin, whatever the amount of Bitcoin is, which is currently $64,000. So they'll allow you to move on and off up to $64,000 every 24 hours. So you can get bypass some of that, and use some of the exchanges. Okay, so that'll be it for another video. All right. So mining. So mining is the process in which transactions for various forms of cryptocurrency are verified and added to the blockchain digital ledger. So each transaction becomes a part of a block, like what I showed you on the VChain Explorer, okay, which is a larger pool of transactions. A block is mined or confirmed by individual miners that collect a fee for verifying each transaction, okay? So you get paid fees for verifying each transaction, meaning every time somebody buys or sells Bitcoin or moves Bitcoin from wallet to wallet or any other cryptocurrency that you're particularly mining in. So mining, and that's how you earn passive income. It's a little bit expensive to get into it, but after a couple of months, you end up making your money back, depending on what type of machine that you have or that you build. Okay. So earlier you heard me mention stable coins. So, what are stablecoins? You're probably wondering. Well, a stablecoin is a digital currency that is pegged to a stable reserve asset like the US dollar or gold. Stablecoins are designed to reduce volatility relative to unpegged cryptocurrencies like Bitcoin. Stablecoins bridge the worlds of cryptocurrency and everyday fiat currency because their prices are pegged to a reserve asset like the US dollar or gold. Most common stablecoins used are DAI, USDC, Tether, BUSD, which is Binance Coin, and also which is just recently starting to be used, UST, not to be confused with USDT, which is Tether. UST is Terra. So those are stable coins. And what stable coins are used for is a lot of people use them for DeFi finance, or they trade their take their profits and their gains and put them in stable coins when they feel like the market is about to fall. And when the market falls, they use their stable coins to buy back into the market. Okay, so that's what stable coins are used for. Those things. So what is the difference between a token and a coin? So a coin represents a cryptocurrency that is similar to the foundation or framework of a building. So it's the foundation of the blockchain. In contrast, the tokens represent a cryptocurrency that is added to an existing infrastructure. The process of building an entirely new blockchain and launching a coin is typically considered to be more complex and time consuming. So what you have is that you have these new projects. Instead of them coming out with their own coin, they come out with a token on another coin's blockchain. For instance, most of these newer coins our tokens are built on Ethereum blockchain. That's why the price of Ethereum have skyrocketed the way that it has. Okay, so then you have the what's called a mainnet. So what these coins will do is they'll start off as a token on, say, the Ethereum's blockchain, while they're developing their mainnet and testing their mainnet. They're beta testing their mainnet, and once they're ready for it to go live, they'll take that token off of the Ethereum blockchain and put it on their own mainnet blockchain, etc. Okay, so the way to remember that is tokens are on another coin's network. Okay, that's how you remember that. All right, tokens are on another coin's network. All right, so what's the difference between a trader and an investor? In general, investors seek larger returns over extended period of time through buying and holding. Traders, by contrast, take advantage of both rising and falling markets to enter and exit positions over a shorter time frame, taking smaller and more frequent profits. So if you just buy some money and let it buy something and let it sit, then a you are a investor. So if you looking for the correct entry points to buy and sell, uh, then you are a trader. Okay, so if you're looking for those things, then that those are the difference between the trader and the investor. Because traders more so trade every day or every couple of days. Investors hold for long periods of time. Okay, so in this dealing with cryptocurrency or any type of financial market, you hear the terms bearish or bullish. All right, simply put, bullish means an investor believes a stock or overall market will go higher. Conversely, bearish is the term used for investors who believe a stock will go down or underperform. Okay, so bullish means that belief that the stock will go higher. Bearish means that it will underperform or fall. Okay, the price will fall. All right, so we have another class and where I go over different things the what is a DEX versus an exchange, DeFi versus DApps, DeFi and DApps. What are DeFi and DApps? We already covered stable coins. We covered what is a swap, the difference between token and well, we already covered that difference between token and coin. We're going to cover the terms huddle, moon, and mainnet, which I kind of went over mainnet this time in this video. How to track your transactions on the BSC scan or Ether scan or any Explorer. Okay. What is yield forming? What are liquidity pools? And videos coming up on what are technical analysis of the chart. So these are videos that you need to look out for on here on the Patreon. These are exclusive to the Patreon, and there will be more videos being uploaded as well as lives and as well as interviews with some of the leading people in crypto and in different aspects. So that's all for this video, and this is the intro to crypto. I hope you enjoyed it. Comment below. Let me know what you think. If you have any questions, just comment below. I will answer and respond. And you guys enjoy. All right.